Hi, KCTruby here. Let's talk a little bit about the financial model on outsourcing and why it works, because I know that's a big, it's frightening. We're so accustomed to billing by the hour. My bookkeepers get $75 an hour. I get $150 an hour. And then, of course, we have to take write-downs at the end of the month. I don't know why we do that, but the financial model is a little scary here. Let me give you an idea of how it works and why this is so profitable to go into the outsourced accounting business. The number one factor is that there's so much inefficiency in the accounting process as it's handled now. Most bookkeepers at a local business are actually running up a burden rate of around $15 to $18 on every single transaction that they effect. That's an easy number to calculate. All you do is take the total burden rate of the bookkeeper, salary plus office space, benefits, etc. So they're getting $15 an hour. The total number is about $75 per year. Divide that by the number of transactions, which you can pick up in QuickBooks. And you'll come up with that number, about $15 to $18 per transaction. Well, that's plumb nuts, because you can get those transactions done in your office with some efficiencies in document management for under $1. And so there's a big spread here, and that's called the opportunity spread. So here's what we do in our business. We go to the client, we say, you're paying the bookkeeper $15 an hour, $30,000 a year. We'll do the job for $24,000. And then here's what you need to do for us, though. All documents need to go into our document management system, and that allows us to do before the fact paperless. We never want documents spread out on the table, because then we're looking for file folders and we're running up down the hall and we're digging through stacks. Total waste of time. We can actually compress 8 hours of work into about 4 hours a day if we are using two things: dual monitors and before the fact documentation. Once we get this set up with the client, and some clients don't like it, well, then they're not a prospect and you don't want to take them on. You might, in our business, we just let those go. I'm just going to let it go at that. We just let them go. So once we get the client set up, the documents start coming in. We use online QuickBooks or some other online accounting software, and the documents come in all day long from the client's location, or we're downloading from vendors or the bank or the credit card company directly into the system. And then overnight, we have low-cost people do transactions. And they might be housewives in Topeka, Kansas. I know some firms use labor in offshore, but those transactions are actually getting done on an average of 50 cents to $1. And remember, it was costing $18 at the business at their location. So we're getting it done for $1. In the morning, we've got 80 to 90% of the accounting work done, because we got all the interbill, payabill, reconciliations finished. All I need to do now is make sure they did a good job, do the quality control. And so in our business, the reason that we're so profitable is we actually use retired CPAs who work at home. We can find them by the truckload. On average, pay them around $20 an hour, and they only work an hour or two a day, but they log onto the system and check all the work that was done overnight or yesterday, and they make all the adjusting entries so that by noon, this client's got good books. And they never had good books in their life that quick. But by using before the fact document management, dual monitors on every desk, overnight, out of office, low-cost labor, retired CPAs during the day to do quality control, ask the clients questions if they need to about some transaction or something, I'm able to drop 50% to the bottom line. So I'm going into that business where he's spending $75,000, paying me $24,000, and I'm putting $12,000 into my pocket, and that's a good financial model. So we'd love to show you how this works. Just fill out the form below and we'll give you all the details. Thank you.